Welcome to F.A.C.E. Let's have a great week. Hello, Hugo, Sinatra, Trade Journal, and Ryan is back. Welcome back, Ryan.
Hey, Dale, how you been?
Okay, buddy, you need a vacation from your vacation?
Yeah.
Yeah, I saw that the kids were doing a little hunting and yeah, and eating what they killed.
Exactly.
So yeah, it's great that you could be a role model for kids and show them how to survive off the land with what's happening in our agricultural markets, preparing them for the future. So let me start off with you, bro. Why the weakness today in Euro, cable, Aussie, sharply lower metals? What's behind this? Was it the visit to Taiwan by, congressional?
That's a weight on risk generally. One of the bubbling things under the surface. But we had some softer data out from China, and they cut some of their loan lending rates, repo rates. I think the market is getting a little bit overexcited about the data. There was nothing negative. There were no minus numbers out of the data. It was just not as high as it was before, either missing expectations or slightly down on the month before. But it was all positive numbers. But you know what the market's like. If China, wobbles or seems to wobble, then the usuals get hit. Commodities, metals, Aussie. It all falls in line.
WTI down over 4.5% here.
Yeah,
today. That's a big loser today. And so Aussie, because of China, probably more than anything, and finally going to get a little risk off. I mean, the S&Ps, I thought we're going to have trouble at 4,200. They exceeded my expectations.
Yeah.
So, approaching this 200, everyone's focused on it. I think eventually it gets through it.
Another big level. You look back at that April-May period you got just back there, how many highs we got there? 1, 2, 3, 4, 5.
Yeah.
5 attempts to break it and couldn't do it. So it's going to be a big level.
Okay. All right. And last week we were talking retraces in the gold, and I talked 1740 or so. That's a little more than halfway back. Silver as well, 1940 to 1916. So this dollar rally may have legs, but do you think that this dollar rally is a rally for new highs, or would you be looking for a failing rally here?
Yeah, I think it's difficult. I mean, if you take just the moves today, my view is that the Chinese data isn't as bad as everyone's making out. You look at the trends in gold, you look at the trends in Aussie dollar, they were all, generally moving higher. Does this create an opportunity? If things aren't as bad as the market thinks, then perhaps that's a fade opportunity. But as far as the dollar goes, I don't know if it can reach those new highs. I was reading an article from Reuters earlier on today, just talking about the Fed in the US and how perhaps the market is so focused on the Fed twist that if the Fed go longer than the market expects, that potentially gives some room for more upside in the dollar.
Right.
How far can it go? I think it would have to be really strong. The Fed would have to go really blast through their terminal rate, which I think is up around 3.75, 3.5%, 4%. Where they think and where the market thinks they'll need to stop hiking. So it's going to take blasting through that, maybe 5-6% on rates, to get the dollar to really significantly move that much higher.
Okay. Well, we are approaching the 50% retrace on euro.
Yeah, and look at that. I looked at it this morning. Look at that technical top you got in there. How long have we been banging on about 103.40.60?
Yeah, it didn't do it until you get a weekly close there. I guess you can't declare a bottom there.
No, exactly. But we're still in a range. It's got to test the low 101s. and get under there to even, you know, think about having a crack at parity again. So keep, you know, techs are playing well when you're looking at the wider ranges, and that's what you got to lean against, really.
So maybe this is setting up a buying opportunity in EG. Maybe we do now get this pullback towards 83, which I think is 78.6 back. I think if it got down here, I would try it, Ryan, and risk the lows.
Yeah, well, I closed out my long-held longs before I went away because I was just giving money to the broker on the carry when it was doing nothing. But I think if it gets down to 83, I'll be tempted to get in again. I'll still have a long bias. Otherwise, breaking 86 and more so 87, I'll try and trade the breaks higher and try and grab them as I go through. But yeah, if you get a dip down to 83 and even worse, I'll potentially get in, depending on the reason why we're down there.
All right, I want to bring Kman in. How are you, buddy?
Ohio, good early morning, Dale.
Ohio State. So it is a little bit unusual to see dollar strength like this and USD yen weakness at the same time, isn't it?
Yeah, well, not completely. So far, we're respecting that. I said this little intermediate support around 132.85 figure. But what happened today? You already touched on the China data, the virus situation, PBOC lowering rates, and that sent the commodity space down quite a bit this morning. What we were talking about, what I was talking about the end of last week about the carry trades, I think there's quite a few carry trades also by short-term traders being set up, and they have had their scare walking up on a Monday morning and seeing those Chinese, let's call it just miss of expectations, and then renewed lockdowns, more virus cases, and then all of a sudden PBOC reacting a bit out of the blue. And I think that that has weighed on the yen as well. If you look at the energy and the commodities coming lower, Japan being an importer of everything, it does make sense that the yen is a bit stronger versus other currencies. So I think it's not abnormal to see this yen move here. I'm relatively I don't have a clear view on the yen right here and now, to be honest.
Yeah, that's fair. It's good to recognize that, in fact. You know, some people remember early in your career, you'd feel uncomfortable with that and press it and try and create an idea.
Yeah, a bit out of nowhere, right?
Did you do that when you were? Can you remember that far back?
No. Come on.
Me either, bro.
I'm suffering.
I've seen pictures. That's it. So.
I've got. We are all suffering from global Alzheimer when it comes down to those kind of.
And Blake, how you doing today, bro?
You know, I'm actually doing really good. I got up this morning and I closed out a lot of dollar longs that I had on from over the weekend and from last week. So all good.
Yeah.
Yeah. And good morning, Ryan, and welcome back.
Hey, cheers, mate.
Cheers. And good morning, Kman as well.
Good morning.
Good. What did you say when you came on?
Ohio. Good morning in Japanese.
Oh, is it really?
Ohio gozaimasu. Yes.
That I did not know. I thought you were just saying, you know, you were just naming which state is round on the side and high in the middle.
Oh yeah.
That was a bad joke. That was a very bad joke for early in the morning. How are you doing, Dale?
Okay, bro. Pretty good.
All right, good. Well, you know, I was actually, when I got up this morning, and I got in front of my computer, I started taking off some of my dollar longs, and I was pretty aggressively long the dollar last week, going into today. So, you know, it's nice to, you know, wake up and get in front of, you know, the markets that have been working in your favor. But, you know, I guess I kind of questioned how much more strength that we're going to have in the dollar right at this moment. But, you know, you start to see equities sell off, and, you know, the dollar may have some more gains. You know, the dollar is really, you know, one of the things I think we got to recognize is the dollar has really maintained the risk off, you know, proxy for the last several months. I mean, this is, you know, the dollar really responds well when the markets are, you know, under duress. And now that we're seeing the equity markets kind of pause up here, you know, the dollar just catches a bid, you know, just as you get a little bit of a whiff of risk aversion. It's interesting. And I didn't expect such a big move, but we are seeing it universally across the board. So I wanted to ask you guys, Ryan, I know I heard you say this, that you didn't think that the Chinese data was that bad overnight, but you know, I look at the retail sales numbers, and you know, those look pretty ugly. I mean, from as consumers, or as China builds out their middle class, which they've done a significant job over the last 20 years, building out this middle class and of consumers and for their citizens. Retail sales has become increasingly important over the last few years to, you know, for their economy. It wasn't so important, you know, 10 years ago, but now it is. And I saw those numbers, and I was like, eek, you know, but I know they also provided a little bit of stimulus. So how are you guys seeing what China's going to do here? Because, you know, people, you know, cheered China for loosening some of their policy, but also their data didn't look great, you know, as far as I can see.
It's like I said on the flow show, I tried to explain on the flow show, what do you mean by doesn't look great? Because all the numbers came up positive, except for the year-to-date retail sales for July, which was down 0.21% versus down 0.69% prior. Every other number,
production was year over year was weaker, 3.8% versus 4.5% expected.
It was a plus number.
It was, but it was below forecast expectations. I guess that's what I should.
The point I was trying to make is that if it was down 3.8%, then you're talking problems. If retail sales year on year generally were down 2.7% instead of up 2.7%, you're talking problems. And I'm not saying the data isn't soft, but they're not minus numbers.
Yeah,
they just missed expectations or were slightly down on the month before. That doesn't scream, you know, China's falling off a cliff. It means, the market reaction is now screaming about recession.
Yeah, and I hear what you're saying. The data was soft. It wasn't like, you know, horrendous data. But look at the CNH action, and you know, that right there tells you that the market, or at least, you know, I don't know, the PBOC is selling selling the crap out of you know, the renminbi and pressuring that, you know, to ease off some pressures of China in general. But the market's also taking wind of that too. So, you know, I don't know, this right here signals that we might really actually see some real live risk off and some dollar strength across the board. Kman, how are you reading this data?
Yeah, I think on the face, the data they look like Ryan say, but I think to me the kicker is that PBOC recognizes what might be going on and the cutting rates. I think that was the real kicker. And I'm the other way around. I'm going to buy dips in dollar China from now. But it doesn't mean to me that all the rest needs to react like it did. I think the rest really is reacting because there is also less liquidity and because the market was the other way around. As I was saying, we were talking about those carry trades, which are usually you're putting them on in a risk positive or global growth environment. They have much more chance of making money. And when the PBOC comes in and recognizes that something may be going wrong, and I think actually it's not only those data, but I think there's another province closing down factories from today until the 20th. And I think the combination of everything has really scared some of those people trying to look at the glass being perhaps too much half full. So no, I understand the reaction, but I think a lot has to do as well with we're mid-August, right? We are in the middle of the summer, and everybody is trying to go through the same needle of the eye, and I think some of the reactions have to do with that.
Yeah, that makes sense.
But I am rather on the other side, and I think if PBOC reacts outside of normally planned meetings, they recognize that something is fishy. So I'm rather going to buy it if I get some. If I get one, I'm going to try to buy dollar China on the dip again.
All right, well, that's great, and a great explanation, Kman. So and Ryan, thank you very much. I want to ask you guys this, and Dale, you and I, we talked about this actually, this last week about the dollar. The dollar is a little oversold, caught everybody off guard. Caught everybody on the short side.
That day, you were short the euro. I was buying the Dixie.
Oh, that's awesome. And, that was for me, so when I trade, when I trade the markets, there's either, I trade like, fractional sizes. I might be in a position. I might say, okay, well, I'm not, and that's most of the time, I tend to trade, maybe like a half size position on where I'm really comfortable, being in a position. I do that, as I stick feelers out in the market, or I might be planning to layer into a position. There are times in the market where I go, full size or more than full size. And the euro was that case this week. I mean, because we here on the F.A.C.E show, we've been talking for a long time, getting short the euro dollar back at 103.50, and because it was 2016 previous support, it was multiple lows into this bearish wedge, and so I got very, very aggressively short the euro, and I just closed out half of it this morning because I was so short from last week. And you'll notice that we have now this double top really just kind of played out. So now that we're here, what do you guys do? I mean, because like I said, I pulled off.
You had a trend line in the dollar that it got back to Friday. Is it back above it?
This trend line here from the channel.
Yeah, see, Friday. Yeah, right. So Friday, you were saying, I'd be careful. It was a breakout. It's testing the line. Now it's back inside.
Right, there it is, and we're back above it right now. So I mean,
about 107-ish.
Yeah, I think 107 is definitely doable. But here's what I didn't want to do that. Let me ask you guys this, and this is what I really wanted to ask. What do you do with the dollar here? Do you continue to buy the dollar this morning? Do you come in, like I already covered half of my position. I'm almost thinking, do I have to get back in that and continue to press the dollar on the long side, or do you guys think that the euro eventually does break out? Because I'm kind of on the fence at this point. It's like, I don't know if the euro is going to spend much time below 101, to be honest. What do you guys think?
I'd be buying it there.
You want to be buying it there, okay? I mean, but the other side of that is, and I want to ask Ryan and Kman this. I mean, are you guys really bullish the euro going into this fall? I know I'm not.
No, not at all. There's no reasons to be bullish. In fact, there's a situation where things will get worse with the weather at the moment, adding to all the other issues going on with Ukraine and whatnot. It really could be slowdown time, and if costs are really going to ramp up, if they can't fill their energy supplies, it's going to be a painful winter in Europe.
Yeah,
it doesn't make you want to buy.
Yeah, I mean, and how's that going to be for you guys? And look, I actually was very bearish on the sterling this week at this channel resistance. I played it a lot to the short side this last week. How's that going to affect you guys in the UK?
Pretty much the same. We got a big next month. We've got another big jump coming in the energy cap prices. So they're expecting, upwards of £2,000 a year to be added to people's bills.
Wow.
That's
all right.
£150, £160 a month people are going to have to find to pay out. You know, it's and then it's going to jump again. So the pinch goes on.
Dude, I'm going to ask you guys this, and this is just more just out of curiosity, because both Kman, you and Ryan live out of in the UK. Do you guys have like wood burning fireplaces? Pretty much every home has it.
Nope.
No, really?
Yeah, we rely on gas and electric.
Wow. So you guys don't have like
some
wood
people
burn?
have some people have them, but
It's not widespread.
it's rather than a habit.
Gosh, I would think it would be more. I'm sorry. Go ahead.
I think more people will be getting them.
I live in the middle of the desert and I have a wood burning fireplace. So I would imagine that you guys would too. But believe it or not, it actually gets a little chilly in the desert at night in the wintertime. Dale knows what I'm talking about, but I would have thought that you guys had a bunch. I would have thought everybody would be stockpiling like wood right now. So anyway, that's just I was just curious. That's interesting to know. All right. So because of what you're just saying, do we sell rallies in the pound and the euro? Is that, I guess that's what I'm going to ask.
Yeah, I think I'm on that side. I was short euros, but then I was a bit short euro crosses across the board as well. But this morning I resold a piece of euro dollar, just waking up and browsing through the news. I resold euro dollar this morning up in the 102.30 zone. So
now here's something that I showed people in the ForexAnalytix chat room. And by the way, hey guys, if you want to see what happens in the ForexAnalytix chat room, this is our general chat room, and you can just see like this is when I got up, just so you guys can see how active it is. And this is an hour ago. I got here around hey guys, right there. Good morning. That was it. Right there. So this is just the general chat room, not including the trades room, the news and research room, the Spanish chat room, the macro flowonomics chat room. This is just our general chat over the last hour. So you want to see a very active community? Come hang out with us in the ForexAnalytix community. That's that we're all like-minded people talking about the markets, and sometimes Netflix shows, because if it gets boring, that might be a topic of conversation. Anyway, what I posted in there a little bit earlier.
Just quickly, Blake, while you're talking about the quid, Chris has made a good point. We are getting closer to when the decision on the next UK PM that's going to happen end of August.
Trust,
beginning of September.
Trust and trust, right?
2nd September they vote. 5th of September we get the results. So 2nd of September by midnight we will know probably. Enough leaks here. Yeah,
I've had a bet on Sunak because he's good odds.
Really? Should I be betting on Sunak? He would be good for the sterling. He'd be good for the pound, right?
He'd be good for the pound, yeah.
Yeah,
I think probably better than Truss. But I couldn't resist the odds. They're about 9 to 1. So
yeah, look at you gambler. But there was actually a report. You might have missed this last week, Ryan, since you were out, in the woods with your kids, fighting those terrible bunny rabbits out there. That's an inside joke, guys, because when we go out in the woods here, we all have guns because you're worried about coyotes carrying your kids off in the middle of the night, and Ryan has to deal with like bunny rabbits and stuff out there in the woods. So
that's frightening.
You guys got little tadpoles and stuff like that. No, but jokes aside, there was an article out in Bloomberg last week about how Truss wants to do some damage over there at the Bank of England. Is that true, Kman? Did you read that?
Come again?
There was an article in Bloomberg last week about Truss and what she wants, the changes she wants to make at the Bank of England, and a lot of people worried about the gilt market and the sterling in the event that she gets the PM position. What do you guys think?
Well, I mean, the Bank of England is fighting back against that forcefully, right? So I'm not sure if she would get enough support from the real economists to really abandon the inflation target and just go on the money supply side. I don't think I'm not sure. I really am not sure that she would get enough support to even try to push that through.
Okay. Yeah, like any politician, right? They talk a lot, and what they can actually do in real life, in practice, is different than what they say. I mean, you can probably nail that to any politician out there. All right, thanks. I was curious about that. Hey, I wanted to show you guys this because we did talk about it in the chat room. The Euro Swiss is at 161% extension, technically, of the last bounce that we've had. I mean, it looks gross. I mean, you look at here, I'll give you guys a longer term view. I mean, this head and shoulder pattern, which I don't like head and shoulder patterns as continuation patterns. Most people know that about me. It's like one of the worst ways to read a head and shoulder pattern. However, I'm not going to ignore it. I mean, it looks ugly. I mean, this Euro Swiss, I mean, that's a weekly chart. This is the Euro Swiss. You guys, I mean, what do you do here? I mean, that alone tells me it's really, I mean, you're fighting a really strong trend if you're trying to be long euros.
Yeah, I mean, it's partially the euro, and then the rest is S&P giving the green light actually to buy Swiss. And I'm staying out of Swiss because I've also seen this level. We spoke about it, right? And I spoke about it end of the last week. I've seen this level, but then there's so much weight hanging around euro's shoulders that I'm really I'm not even thinking of fighting it, to be honest. If anything, I would sell rallies if we get back anywhere close to parity right now.
I mean, this is one of those situations that if we do see some like risk aversion and people want to, asset managers want to say, well, screw it, I don't care. I don't care about the negative rate. Still, I'm buying Swiss francs for safety reasons. I mean, we could see this really accelerate lower. This is one of those scary charts that I think that if you're trying to trade the euro on the long side, you've got to keep an eye on this one at all times. That would be my view. Now, I think we're a little oversold, just like, Kman saying here. And, you look at this divergent relative strength on a weekly chart. This doesn't give you any reason to be buying it necessarily, but obviously if you're short, you got to be just kind of keeping an eye on it. Pretty ugly chart, and I thought I'd just bring it to everybody's attention.
I like what Richard Adams says today. A great metaphor that the community that you guys are operate every day is like a Swiss Army knife of Forex. What part of the Swiss Army knife are you, Blake?
I might be the
corkscrew.
I think I'm the toothpick.
No. Hey, Dale, that's me. The corkscrew is me.
You're the corkscrew.
You're the corkscrew. Yeah, he is the wine drinker.
Ryan, are you the fingernail file?
No, he's the beer. He's the beer cap opener.
All right. See, so we are. Definitely. Very good description of us, Richard. Thank you.
Thanks, Richard. That's Bran, actually. So thanks,
Bran.
Yeah. Hey, I guess we should probably review the S&P really quick. We are really close to the 200-day moving average. I know I talked a lot about it on the week ahead video. You got the S&P that's right up against the getting up against the 200-day moving average. This is scary. These are scary resistance levels for me. If I was a bull, like if I was a stock market bull, I'd be really paying attention to it. However, you got to look at the NASDAQ. The NASDAQ's trying to break out. We're above this descending trend line. We are knocking our head up against some horizontal resistance on the NASDAQ 100. You got the Dow right at the 200-day moving average, and you have the IWM, which is also right at the 200-day moving average. Now, when we open, because you can see pre-market, we're going to be lower here. And remember, this is a really important chart because the IWM has been a very classic false breakout indicator. And I know I pointed this out last week, and yeah, we're breaking out right now, but that, there's a lot of time between now and Friday. So, this happened way back here in October, and that was all-time high to, what is it, a 20 some odd percent failure, 30 some odd percent, 34% off the high. So just, keep that in mind. Just
Wow.
something to pay attention to.
Blake?
Yeah, what just happened?
Empire Manufacturing just came out at minus 31.3 versus plus 5 expected.
Holy
first manufacturing
crap.
data of the month.
So, that is a very deflationary number. Holy cow.
Bringing back cable.
Wow. I mean, yeah, look at this sterling here. Big bounce. Wow, look at the dollar Mexican peso. Stocks should love that. You would think.
It's funny because dollar yen came off 30 points before it actually the number came out, and the yields dipped below 280 just before the number came out. Somebody had it clearly.
Yeah, that is crazy. I forgot that the data was coming out. I know it's like the important data, but see, it's data like this that's actually a very it's outsized. It's way outside of expectations that moved the market, and that's what happened today. So kind of glad that I covered up a lot of my dollar longs here. So I might look to reestablish them. It should be an interesting day for a Monday in the middle of the summer. So
Yeah.
I want to
wild volatility.
Yeah, we love it. Volatility is good. Volatility is good. All right. Hey, I want to say, guys and gals, check out the trader funding program. We had actually 2 traders get into the real money program. They passed their assessments. One of them who's probably listening in right now, Dave, congratulations. He hit one of these big, he's going to be accessing one of our big accounts. So if you want to learn more about the trader funding program and get instant access into the ForexAnalytix community, watch the 2-minute video right at the bottom of this page. So that's our sponsor and word from our sponsor. So Dale, have a great interview. Ryan, we are so happy to have you back. If I was there in person, I'd tickle you in your ribs. Just kidding.
Look, it worked.
That's an inside joke. And then and Kman, it's always great to have you back. And Dale, we love you. And
just call me Lou Gehrig.
Happy to have you here. So
Lou Gehrig, the Iron Man.
Anyway, that's right. All right, guys.
Thank you, team. Everyone. Yeah, it is great to have you back, Ryan.
Thanks, mate.
All right, everybody. So Andrew, welcome to F.A.C.E. I'm looking forward to having a discussion with you. Glad that we connected on Twitter. How are you today, buddy?
Oh my gosh, how are you doing, Dale? I'm doing
Pretty
awesome
good.
today. I actually just finished up a run a couple of minutes ago. And thank you so much for having me on your show, man. I really appreciate it.
It's great to meet new people. I believe we learn from everybody, and checked out a little bit of your background that you used to be with Vanguard, and you did a lot of their bond work and derivative work, emerging market stuff, and graduate of LaSalle. Where is LaSalle? Is it in the Midwest?
LaSalle, it's in Philadelphia, Pennsylvania.
Okay.
And I played Division I tennis there as well.
Okay. All right. Well, great to have you here. I know a little bit about your journey, but so out of school, you went to Vanguard. Was that your first intro to the industry?
Exactly. Yeah. So let me give you full background. Yeah. So for me, pretty much ever since I was born, I always loved playing games, and I've always had pretty much an obsessive personality, where it was when we were playing games as a kid, I was always that kid, one more game, one more. And when I found something that I liked, I would really dive in head first and go into it with a laser beam focus. So my first passion in life was actually basketball. And I was super into basketball, wanted to be just like Mike, all that good stuff. Ended up playing that till about junior year of high school. Had some difficulties. I was pretty fly for a white guy, but had some issues, moving up to the higher ranks. Then I got into tennis. It was just like a gym teacher. And I was like, hey, we need some extra guys for the tennis team, come out for the team, whatever. And I did that, and I just fell in love with the sport. And again, I got super obsessed with it. And I was like, I'm going to be a pro tour tennis player. I'm going to be the next Federer, all that good stuff. And I ended up getting a scholarship to play in college, which was awesome. And that was like the primary reason why I went to LaSalle. I studied econ and finance at LaSalle. And I remember in school, it was just like, oh my gosh, I hate school. But economics just made so much sense to me and I really enjoyed it. But yeah, so I did that for a couple of years. Then I realized, oh my gosh, pro tour tennis isn't going to be a thing. You know, what do I do now? These European guys are smashing me. And so about that time, that's where I really got into investing. It was in my junior year of college. And I took a financial markets and institutions class. And I was like, oh my gosh, this is another game that I can play. And really what I loved about it was like, I could see the writing on the wall with corporate life, how it's like a lot of politicking and nothing's really a meritocracy. And you kind of just have to like wait your turn for a lot of things. And so I was like, hey, portfolio management, like if you're good, you can earn more money. If you're not as good, you earn less money. So I was just super attracted to it.
Yeah. Mm-hmm. And the big, one of the best jigsaw puzzles on the planet is putting all the pieces together. So were you going to share any looks or views that you have on the market with us? Do you need the screen share or should I?
Yeah, that would be great. Yeah, I'm going to go ahead and share my screen. I'll share with you my thoughts on the market. But anyway, long story short, went to Vanguard and I was working in their retail investor group for my first year there.
Yeah.
And I was like, man, I really want to get onto the portfolio management side. That's my passion. That's my goal.
Is that code word for you were making cold calls?
So not cold calls, which is good. So at Vanguard, Vanguard's so big, the clients call Vanguard, but I was receiving the calls. Yeah.
Nice.
Yeah. So I did that. And I was just helping retail investors plan for retirement, that sort of stuff. So it was a pretty cool experience. And then I worked my way onto the fixed income trading desk. And like you mentioned earlier, I got a taste for pretty much everything. And I was like, let's just, any work you guys want to give me, I'll do it. I want to learn everything. So I got to rotate through like the emerging markets desk, index desk, money markets desk, learn the full trade life cycle on an institutional trading desk, and learn some derivatives as well. I ended up getting into an advanced development program. It's like the IMDP, Investment Management Development Program. Ended up getting kicked out of the program because I had so many compliance violations. And from there, I was like, you know what? I'm making more money trading than I am in my day job. So that's where I jumped off and I started trading full time.
Okay. Right. Great story. What were the compliance problems? Like internal things that you were supposed to do that you didn't do?
Exactly. So like basically Vanguard, world's largest mutual fund shop, multi-trillion dollars in AUM. They're trading pretty much every single security in the market.
Yeah.
So we had all of these internal rules where basically they tried to incentivize you to only invest for the long term in their mutual funds. So if you wanted to trade any individual stock, you needed to get approval, compliance, like all that good stuff.
Yeah.
And I was super into trading and I just wanted to like test my skills and like really just do stuff in my brokerage account. And it ended up just continually causing me issues and whatever. So it was kind of just like
the freedom. I mean, it's tough enough to perform in the markets without having corporate hurdles to overcome. So So okay. And then how did you come to, relying or learning about technical analysis? Because you didn't learn that at LaSalle.
I did not. So very cool stuff. When I first started, I'm a CFA charter holder and that's all fundamental work.
Yeah.
And when I first started my journey, I was like, technical analysis, this is garbage. This doesn't work. This is chart voodoo, whatever. And I didn't incorporate it into my process at all. Then as I got further down the road, I met the portfolio manager on our emerging markets desk at Vanguard. And that's that's the best team that they have at that company. And he was like, what are you talking about, man? Like we use technical analysis all the time. And he was a huge proponent of it. And as I got further along my journey, now technical analysis is like the primary component of my strategy and what I do now. So it's definitely been a learning experience.
Any influences, books, mentors that helped you along the way?
Oh my gosh, I have so many. So I have like my Mount Rushmore of investors, obviously Jack Bogle, founder of Vanguard.
Okay.
And then as well, my strategies now, they're primarily influenced by Mark Minervini and his work,
Okay.
and David Ryan and his work. Those guys are multiple US investing championship winners.
Relative strength.
Yes, yes.
Okay. So determining leadership and laggardship for your longs and shorts, right?
Exactly. So that's the primary components of my strategy.
And
but I would
for
say
charting though, charting. So is it Mark who's charting, or did you read books? I know you used candlesticks. Who would you say was your charting technical mentor for
I would
the
say,
setups that you have? Or would, yeah, and you know, it's okay to be self-taught too. Would you say you're more self-taught technically?
yeah, I've been just a big time tinkerer. So I tinker with everything, and I just try to consume as much as I can. I've had so many teachers that honestly, like in the age of the internet, man, this is fantastic. Like you can have mentors that you never even met that person. They're a huge mentor to you. So I picked something up from everyone, and primarily in my technical trading, I use market profile levels. So I'm looking for high volume nodes where a lot of transactions have occurred.
Okay. All right. Familiar with market profile. A lot of success people have using that. So tell us what your view is on the S&Ps, and were you able to recognize this when everyone was scared to commit to taking some risk back in late June?
Yeah, so that's, for myself and for our group, like everyone got super bearish on the market, and we were seeing through our analysis, every week I'm looking at positioning data in the market. That's another key component of my process as well.
COT?
Yep, yeah, the COT data is great. I love that. And then there's also the Naeem exposure index, which I love looking at.
What's that exposure index again?
It's the Naeem exposure index.
Okay.
And it's basically like an index of equity fund managers, and they just say how exposed they are to the market.
Okay.
And
I know there's a hedge fund index like that shows like hedge funds were underinvested all the way up.
Yeah, and we just saw over the last couple of days, there's been a lot of hedge fund short covering.
Okay.
So yeah, those guys are getting blown out of their shorts now at this point. But yeah, back in May, I just saw like everyone was talking about how overvalued all these companies were after they had gotten hit by like 50 to 80% off their highs. And it just seemed like a really good contrarian time to make some additions to the portfolio. So that's really where we were getting very aggressive. And
are there
now,
market profile signals around that 36.5 level? Because it hadn't been there for a long time. So I'm wondering, what may have tipped you off for a turn with what you use.
Yeah, so honestly, in terms of the turn, so I incorporate so many different disciplines into what I'm doing. Honestly, what I was looking at was the positioning data was super, super light. I saw some survey data that showed these hedge funds, they're at record net short levels. And then we also started to see on the technical front, we started to see energy stocks breaking down. And that was like a big tell. We started to see those guys break down, the fertilizer stocks breaking down. A lot of those inflation beneficiaries were really just coming off their highs. And the growth stocks, like the high risk stuff, that started bottoming out in May.
Russell,
also the ARK Innovation ETF. Can you see my screen at the moment?
Yeah.
Are you seeing my chart up here?
Yeah, I see the ES.
Yeah, so look at this. Let me show you something. So this is the ARK Innovation ETF. Let me just pull this over here. So I use this as a gauge for like growth stocks, high risk stuff, lower quality stuff.
Yeah.
And look at what happened here, Dale. So we made a lower low in June.
Right.
But then later, we ended up making a higher low, higher low, higher low. And what's interesting is like, look at the shape of this chart, how it's kind of just like drifting higher.
Yeah.
The ARK Innovation ETF, look, the low was made in May. This was the low. In June, we made that first higher low. Look at the S&P 500. Look at May. So if you look at, this is back in May, right? The S&P 500 made a lower low in June, whereas the ARK Innovation ETF made a higher low. So that was a huge tell.
Yeah, that is. I didn't notice that when that was happening down there. That, yeah, very nice correlation seeing that, because that was the one that led the way down. Why can't it lead a recovery?
Exactly.
Okay. So what are you thinking here, Andrew? I mean, we're approaching this 200-day. Everyone's eyeballing the 200-day. We get some type of resting action here before it attacks the 200-day.
Yeah. So Dale, I'm going to be perfectly honest with you, man. I'm pretty much out of the market. I have a couple positions left, but honestly, this rally off the lows, like, you're an experienced guy, like, you know how this stuff works. Like, on average, the S&P 500, an investor can expect about a 7% return per year. And the S&P 500 just advanced like, 10 to 15%, pretty much in a straight line.
In 2 months. Yeah.
Yeah. The NASDAQ's up like 20. It's crazy stuff.
Yeah. So flat. So that means no opinion, but lots of firepower. Should you get that pullback, you're a buyer.
Yeah, so I do have an opinion. So right now, like, this is actually how I'm exposed. So right now, I keep track of everything here on this spreadsheet. This thing really helps me. But right now, the only position that I have on, it's actually a merger arbitrage trade. And it's a Twitter long. And then right now on Friday, I picked up these exposures. I got long some VIX on November 16th, 25 strike calls. And I'm also long some IWM put options as well for expiration in September. So those are the only things I have on, but I got 70% cash. And I'll show you the model that's really informing that if you'd like to see it.
Sure. Appreciate you sharing it.
Yeah. So this is something, and again, like, I've had so many successes and failures in trading, and it's always just, how can I get better and how can I improve? So this is a model that we created, and this is our VVIX risk model. And I'm not sure if you follow the VVIX, but it tends to be a leading indicator of the VIX. And it's basically like, what do the prices look right now in terms of VIX options? And as you're aware, the volatility of the market, the VIX and the S&P 500, they tend to be inversely correlated, right? Or when the market advances, volatility is coming down. So this model, all it does, it takes a look at the 5-day correlation of the VVIX with the S&P 500. And when those correlations start to increase, so when the market's going up, but the VVIX stops going down or even goes sideways or starts to move up with the market, it'll flag that as a white candle. And historically, when you get 4 white candles in a row, when this correlation picks up, there tends to be like a little bit of volatility. And you'll notice that here, gave a signal back here as well in August of 2021. This thing has given so many signals. Again, no model's perfect. Every once in a while, there's a false signal as well. But like, look at this, man. So this is before the COVID crash. Look up here. Look at all these white candles.
Yeah.
So for this, I incorporated this into my process. And I said, you know what? If I ever get the signal, I'm going to make sure that I close out of some positions. I de-risk myself. And the worst thing that can happen is the market continues to advance. And that's perfectly fine with me. So I exited most of my positions.
We got 3 of them here.
Yeah, so I exited most of my stuff. And again, worst case scenario, the market advances, but so far in the pre-market, we're seeing some weakness here.
That's a proprietary indicator. That's something you came up with yourself, Andrew?
It's actually something I borrowed from a friend. I kind of like repurposed it and recreated it. But yeah, this is a tool that I use. We call it, so this is our VVIX risk model. And in terms of setups, I call this
V like victory, VIX model.
Yep,
VVIX.
exactly.
Okay, interesting.
And this setup that we're seeing in the market, like I have a trading journal and I keep track of all my setups. I'm calling this one an overheat setup in the market. So like right now, when the overheat setup occurs, I tend to get more flat. reduce my exposure to the market. And I have the option of adding some hedges, which is what I did. So we'll see if it works or not. But regardless, like this has just been such a good couple month run. I'm like, you know, if it keeps going up a little bit, yeah, I'm perfectly fine with that.
Yeah. Have you made the transition? I know earlier in my career when I have a good run, I would psychologically say to myself, well, it's only the house, it's the house's money. And then, you know, you're sloppy because you feel like it's not yours. But, you know, over the years, learned to say, well, it's mine now, and I'm going to protect it. So I think that after you have a good run, sometimes you get a little hubris and get sloppy. Did you experience that at all in your journey?
I experienced that. And that's actually the genesis of that VVIX risk model, because
Okay.
I find what most traders do is they tend to, as the market advances, they're making more money, like you just mentioned. And so they start getting more bold and adding more risk and layering leverage and options. And what ends up happening is they're the most exposed to the market at the top. And then when the market starts rolling a little bit, like I see this right here. This is the 20-day simple moving average, right? Like I see it as we've got immediate term risk to the 20-day, because the market, you know, always tends to mean revert to the 20-day. But yeah, so you end up being the most exposed to the market at the highs. And then as the market pulls back, you end up stopping out of positions and you have the least exposure on the lows. And so for me, it's like, I don't want to be like that. I've been that trader before, that you get excited and you know, just go too crazy. So for me, it's like, you know, again, the worst thing that happens is the market rips up to the 200-day simple moving average. If that happens, I'll just be like, you know what? That's great.
One of our attendees says, is it similar to VIX fix in TradingView?
Yeah, so you can find it on TradingView. It's just the VVIX. So like the VIX measures the price of options on the S&P 500.
Yeah.
And the VVIX measures the price of options on the VIX itself.
Okay. All right.
So it tends to be a nice leading
Amit.
indicator.
Okay. Any other instruments that you're focused on, or is it mainly stock indexes?
So the stock indexes I do trade, but primarily I trade mostly growth stocks. So I'll show you a few that are on my radar, if that's cool.
Sure.
Yeah, so every single week, you know, I do my homework every single weekend and I prepare a bunch of, you know, pretty detailed trading setups.
Yeah.
So because I have this view that, hey, the market's overheating a little bit, again, like I never turn into like, you know, super perma bear or anything like that, or I try not to be like too biased in the market. But this stock F.A.C.E, the whole year, the major theme has been energy, whether it's, you know, clean energy, solar stocks, or I refer to it as dirty energy, you know, crude oil, that sort of stuff.
Right.
F.A.C.E, this is a stock that we traded this one, and we took the stock from about $180, like down here, all the way up to about 280. And I closed out the position because I was like, you know what, like enough is enough. Like sometimes you just hit your target and you want to just piece out of it. But I'm continuing to watch the stock. And for this setup, I'm actually looking for a pullback to the 20-day simple moving average. And if that happens, I would love to take this thing back on the long side.
Okay.
So yeah, F.A.C.E, and I'll just show you this as well, Dale. So I use
nice breakaway gap it had coming out of it. Really classic Edwards and McGee technical analysis of stock trends stuff.
Yeah.
Yeah.
Yeah. And this company, it has the sales growth and it also has the earnings growth.
Okay.
Like I'll show you this as well.
So you look at the fundamentals are important.
Yeah, they are important. I like the technicals for assessing the trend, and the fundamentals kind of inform me on like how big could the move be. And yeah, it's definitely an art, but I try to focus on stocks that have really good technicals and really good fundamentals as well.
Yeah.
So look at this stock. Look at the sales growth that we've seen over the past couple of years. Pretty phenomenal.
Yes.
And the earnings growth as well is really good. So this stock put in a beat and raise quarter, while a lot of other companies, they're getting crushed.
Yeah.
But it does trade at a high PE ratio. Look, it's at a 91. And I don't trade off of PE ratios or anything like that. But you know, I just try to be cognizant, like, you know, if I hit a really nice winner in something, Like, I just want to control my risk as much as possible.
Okay. All right. Well, it was a great presentation. Really enjoyed, hearing your story and learned a few things from you, Andrew. Best way for people to get in touch with you, follow you. I know your Twitter handle is at Real Pristine Cap. Is that the best place for people to reach you, or you want to show your website on the way out here today?
Yeah, that would be fantastic. So yeah, definitely follow me on Twitter at Real Pristine Cap. But if you really want, market analysis, everything I'm trading in real time, visit pristinecapital.net. And this is really where you can find us and you can find our group. And really, the main focus of our group is just to trade, make progress, and really everyone's just focused on improving. It's not really about let's double our accounts overnight or anything like that. It's let's just try to get better and let's really tackle this.
Okay. Well, I tell you what, your love of the business shines through in what you say. I could feel it, and really, I'm glad that we met. Like it or not, you're now my trading warrior brother.
Oh my gosh.
You survived an interview with me. I was pretty easy on you, though.
Oh my gosh. Thank you so much, Dale. This has been so much fun for me, man. I really appreciate it so much.
Well, we'll do it again. How
Awesome.
about
I'd
that?
love
Down the
to.
road in the fall, I'll get a hold of you on Twitter, and rooting for you and all your people now, Andrew, and good luck the rest of the summer trading season and into the fall. And thank you for sharing your wisdom with us. That wisdom is something that isn't just given to you; it's earned through sometimes taking a kick in the teeth. So appreciate you doing that. Thanks very much, and I'll catch you next time. And everyone seems to enjoyed it. Bhavana, thanks. Laura. So thank you for sharing your
Yeah,
work
thank you
and
so
what you're
much.
looking for. What you're looking for.
Thank you so much. And thank you to everyone listening. I really appreciate you all.
Yeah, and don't just count your indicators, count your blessings. And I'll be back tomorrow for Turnaround Tuesday. And you could join our team, the Dream Team, in about 18 minutes on the Morning Edge. Everyone have a great day trading. Adios, and thanks one more time, Andrew. See you.